Copper just hit the 96th percentile, and copper at this level is a leading indicator of global industrial demand. Something is breaking beneath the surface and the data confirms it. Right now, the S&P 500 is at 7,394.3, the 92nd percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. Snider says the eurodollar system is tightening and nobody sees it. The data says gold rose 3.5% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this week. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst is right, and the data keeps proving it. Oil at $84.8, 174-day streak. Gammon just moved from wrong to right. Gammon is right, and the data keeps proving it. Yield curve at 0.40%. Snider just moved from wrong to right. Score 1 for Snider. Dollar liquidity crisis. Yield curve agrees at 0.40%. McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 173-day streak. Too early to call Hartman right or wrong. The thesis is building, but not confirmed. 167-day streak. The dollar analyst just moved from right to wrong. The dollar analyst call is not working, for now. Gold moving against the bearish thesis, up 3.5%. The volatility expert just moved from early to wrong. The volatility expert's call is not working, for now. VIX moving against the bearish thesis, up 11.8%. Score today, 3 right, 2 early, 2 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question, is the dollar about to surge or is it topping out? Snider says the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast and it is a clean narrative. But here's the problem. Gold rose 3.5% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here is what makes this interesting. The dollar index is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. The dollar index at 99.7, 90th percentile, down 0.1% today. Gold at $4,235, 50th percentile, up 3.5% today. Bitcoin at about $64,000, 3rd percentile, up 0.1% today. Bottom line, the data is pushing back against Snider. Until the signals confirm, the thesis is early. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 99.7. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 99.7 is in the 90th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,235. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 75 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 75 basis points. At this week's pace, that is roughly 75 weeks of runway, that is mid-November, Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, CFNAI flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 75 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the ZIP level data is screaming about today. Owsley, KY, lenders are saying no at scale. In Owsley, KY, the HMDA denial rate is 86% across 50 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of the turn. Leslie, KY, lenders are saying no at scale. In Leslie, KY, the HMDA denial rate is 70.4% across 108 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. LA, days on market is spiking in Huma. Days on market in Huma moved plus 100% in 30 days, now 248 days. Buyer leverage score, 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge, or is it topping out? Let me show you what happened the last time we were here. Bitcoin at about $64,000 is in the third percentile. That means it is lower than 97 out of 100 days in the past year. In 2022, Bitcoin fell from 69,000 to 16,000 as the Fed tightened and crypto leverage unwound. In 2020, Bitcoin crashed 50% in March, then rallied 1,500% over 18 months. In 2018, Bitcoin dropped 84% from its peak as the speculative cycle ended. Different environments, different catalysts, but every time the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, the dollar index at 99.7 is in the 90th percentile. The last time both Bitcoin and the dollar index were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here is what the data says to do right now. Stay alert on VIX. It is surging 11.8% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Phase 1 holds. No alarms. But the runway at 75 basis points is shorter than last month. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.